Suneeta. We're so pleased to welcome you to this joint event that's brought to you by Climate Strategies, the World Resources Institute, and the Natural Resource Governance Institute. My name is Suneeta Kaimal. I'm the president and CEO of the Natural Resource Governance Institute, or NRGI. And our organization is dedicating to supporting just energy transitions in low and middle income countries around the world. Before I begin, I did want to thank the government of Denmark for hosting this event today. I've actually just come from an event on the Beyond Oil and Gas Alliance Pavilion, where representatives from Denmark were speaking as well. And we know how seriously Denmark is about moving beyond oil and gas domestically, and also providing international leadership around an issue that's so urgent and essential. We're, of course, all aware how centrally the debate around the global phase-out of all fossil fuels features at this COP, and how urgent it is for governments to signal their intention to achieve a rapid replacement of oil and gas, alongside coal, of course, with renewable energy sources before we leave Dubai. Just yesterday, the Colombian delegation spoke so eloquently and passionately about the fact that without such action, we are in a world of loss and damage, not adaptation, and a call not to punish their ambition to stop new exploitation. While, of course, the COP outcomes remain uncertain, what we do know is that the inequities and the injustices that persist in today's world will be even greater after peak oil, unless we anticipate and plan for a truly just transition within producer countries and, of course, globally as well. So this is why we intend to come together today, because it's urgent and important and a shared responsibility to chart a course that is just through the phase of declining production and the use of oil and gas. So our panel today is going to share brief updates on 3 pieces of recent or ongoing research and analysis. And we're excited as well to be joined by a respondent who will comment on the contours of the oil and gas transition in the context of Nigeria. So we're going to start with a presentation from Adriana Chavieres Flores, who's the Program and Impact Manager at Climate Strategies. Adriana is also the project lead with Oil and Gas Transitions, which is a joint initiative with SEI that's working to develop a better understanding of the oil and gas transition through scenarios through the North Sea region, as well as producing just and feasible transition pathways and roadmaps for countries facing similar challenges. Adriana.
Thank you very much, Suneeta, and I join you in thanking the Danish Pavilion and the State of Green for hosting us for a 3rd year in a row. And I want to start by showing you a slide here. This is a quote from Reuters. It came out 2 days ago, which says, Uganda could accept a long-term phase-out if it made clear that developing nations can exploit the resources in the near term, while wealthy long-term producers quit first. And this is a quote that actually concerns me a lot in so many levels. I'm not going to get here into a conversation around locked-in resources, but I actually think that this quote also encapsulates a lot of the debates that we are having when it comes to the equity dimension of the transition, not only here at this COP, but also outside of COP. And I particularly want to focus on the second part of this quote, which is about the role of developed countries in leading the way. Since, as Suneeta was saying, we're focusing on the North Sea region, we are understanding just transitions from 2 different levels within our oil and gas transitions program. One is more international, and therefore the need for developed countries to really move first. The other one is more at the national and local level, which is about planning, which is about involving the regional communities and the local communities. And for that, within Climate Strategies in our project, we are using a holistic approach to just transitions. We understand them as being cross-cutting, and that means multi-sector, multi-stakeholder, and also taking into account different pathways for different countries and regions. I'm not going to go into the details of this framework because I only have 5 minutes, but we really believe that this is a good approach for policymakers and different decision makers in really exploring and scrutinizing what are the key elements for planning a just transition out of oil and gas, with some of the principles of this concept focusing 1 and 2, for example, on the decarbonization part, 3 and 4 on the support that the different vulnerable and impacted communities need to have, the 5th one on the cleanup of environmental damage, 6th one addressing some of these economic and social inequalities, and the last one on ensuring that there is going to be an inclusive and transparent process. So this is where I want to begin. We produce different scenarios in the North Sea, which is a region that, as you know, is characterized by really advanced economies with high levels of technical capacity, institutional capacity, but also high levels of sovereign wealth, which actually place them in a very good position to go about a transition in a way that you can also mitigate the negative impacts of such process. And that is why we focus here. Like in one of the workshops where we participated, we basically heard someone saying, if the North Sea doesn't do it, then who will? And this brought us to work with this particular region. We co-created, and that means working with very diverse stakeholders in each one of the countries, net zero emissions and also phase out pathways to 2050 for the UK, Norway, and Denmark, including different milestones, different recommendations, and the role for different stakeholders. I'm not going to cover them here, again, in the interest of time, but I do encourage you to visit our website if you have a curiosity about what the results of those were. We also launched 2 days ago the last one that you can see here on the screen, which is a special issue in the Climate Policy Journal, even bringing this ambition further to the table by asking what would happen or how would net zero value chains would look like if we talk about just transitions even by 2040. I'm here to talk mostly about some of the recommendations that we found when it comes to policymakers and the role of policymakers. So I'm going to summarize 2.5 years of research in these few bullet points. The first thing that I wanted to mention, again going back to the first slide, is that even though we need all countries really on board in this process, developed countries, as I was saying, need to lead the way. And this has been really relevant not only at this COP, and not only, for example, from the perspective of a carbon budget scenario, which actually played a big role in the Danish case study, but we have seen here in the negotiation rooms countries like India really pushing for their right to have a fair share of the carbon budget in the long run. And also, like when we talk about just transitions, we really need to talk about vulnerability. And I know I can see here Mark among our audience, because Carbon Tracker actually has a really great graph where you can see the different levels of vulnerability of countries depending on the level or the scale of revenues that are coming from oil and gas, and also the proportion of the economy that is dependent on those revenues. And you see that the very vulnerable countries are not the ones that we normally talk about, like for example UAE or Saudi Arabia or even Norway in this case. They are kind of in between that graph, but you see that the vulnerable countries are those that are least developed. We can see Nigeria, and we will hear later from this perspective. We can see, for example, Algeria, Venezuela, and other countries where this is really important. So, going back to the slide, across the 3 different case studies, the UK, Norway, and Denmark, one thing that did come across, even though they have very different circumstances, is that the main responsibility for the transition sits with the government. This is the perception from the stakeholders that participated in the different stakeholder dialogues. But we are talking about not like the traditional state of intervention not a traditional way of going about state intervention, because we can see, like in previous crises, what happens is that governments actually change the fiscal and regulatory conditions to basically favor industries. We have seen this in the recent economic crisis. We have seen this through the COVID pandemic, with, for example, Norway extending the tax relief period and measures. We see it also in the UK, for example, with the by cancelling or postponing the moratorium on fracking. In practice, what this means is that governments have a very clear role in really setting up clear deadlines for phase out, including, for example, bans on new licenses, And these need to be accompanied by also intermediary targets so that sectors can prepare for this and they know what is the expectation in terms of, for example, expected capacity, renewable capacity input. Technology, on the technology side, for example, we're talking about the government's capacity to provide incentives for clean industries, business models and infrastructure, and across the three scenarios we see that CCS, hydrogen, and offshore wind are going to play a big role. But we are also talking about the need to disincentivize fossil-based production, for example, through the renewables of subsidies, and also, for example, high carbon taxes. When we talk about the social aspect, governments are expected to provide mitigative actions for those potential negative consequences on workers, communities, regions, and here we're talking about, for example, unemployment schemes, potentially early retirement skills. We're talking about really participatory processes where we can involve those stakeholders in the planning and delivery of the strategies. And very importantly, we really need governments to push forward credible narratives. For example, we've noticed in the three scenarios that net zero was very widely accepted. It didn't matter the category of a stakeholder. They were widely accepted because they are also understood as a social license to continue business as usual. And there were a lot of questions around how that would work, but we really need to start going into the details of that and bring up credible narratives. I think we also need to really decouple the idea that fossil fuels mean sustainable development. For some countries it might, but it's becoming a very dominant narrative without really looking into what this actually entails. And in the interest of time, I'm just going to put or refer very quickly to the enabling conditions, which are actually very interesting, came out of the 3 case studies, which actually tells us like how or what kinds of countries may actually be able to follow a different transition process or really pushing forward the transition in those countries. First of all, the point that they have in the production curve. Obviously, when you have dwindling resources, it's easier. That's the case, for example, of Denmark. But we should not take this for granted without state intervention. So that's also very important to remember. Alternative opportunities for the workforce, it speaks by itself and is sometimes constraining for some countries. A weak oil and gas culture, please don't test me on my Norwegian, but that word means the oil fairy tale, which we have been seeing also now a lot more coming up in the context of the Russian invasion of Ukraine, where we see a premium for basically non-Russian oil and gas that is prompting a lot of countries to start exploring this. And finally, participatory governance tradition. I'm going to leave it at that.
Great. Thank you so much, Adriana. I really appreciate the presentation. We're now going to hear from David Manley with the Natural Resource Governance Institute. David.
I've been asked to stand here.
Okay, no problem.
I'll stay here.
Yep.
Hello, everyone. I'll stand. Why not? My name's David Manley. We've just released 2 reports on national oil companies, and there'll be some QR code online soon so you can see. One of them is called Facing the Future, and this looks at the statements NOCs have been making about the energy transition and their strategies and their responses. And the other one is Riskier Bets, Smaller Pockets, in which we look at the upstream investment of NOCs over the next 10 years and historically, and looking at how risky are these bets when we go past peak oil, which is the topic of this whole conversation. And the clues in the title: the bets are getting riskier, and the financial pockets of NOCs and their governments to afford these bets are getting smaller. So why are we talking about NOCs? They're the hidden half of the oil and gas industry. Half, they own 60% of reserves. They produce about 50% of oil, 40% of gas. They're contributing at the moment 43% of capital expenditure in the upstream, and this has increased over the last decade. So while the whole of the industry has been reducing their investment, NOCs have reduced it much slower than everyone else. So they become comparatively much more important, and that trend could continue. So eyes should be on NOCs. They're also hidden in the fact that they're far less transparent than publicly listed international oil companies. If you look at our national oil company database online from NRGI, you can see the publicly listed ones like Equinor have their financial statements all up to date. But as you go down the line, there's increasing gaps. And the reliability of those numbers actually there are far weaker. There's far less equity analysts looking at it. There's far less analysts at all looking at these numbers. And so that sets up a principal agent problem, that the parts of government, civil society, the people in these countries don't necessarily know what's going on in the national oil companies. And this is important because they're handling, we think, $1.8 trillion over the next 10 years into the upstream. Much of this is public money. So this is public money that the public need to know about how it's going to be invested. And a large portion of this, 425 billion of it, won't break even if governments meet their climate pledges. So this is not if they meet net zero, this is if they meet their current pledges. And there's a various number of reports saying that's becoming more and more likely. So it's a fairly credible scenario. They're also very important for governments in other ways. They're handling even larger amounts of revenue, as the Petrostates report showed. They're also entangled in many other ways. They often have mandates to secure jobs, to provide energy, and energy security is one of the main things we saw from NOCs being a primary reason for why they have to continue investing. Pemex from Mexico is a key example of this. They have to handle huge pension funds for their employees and past employees. They often have to guarantee jobs for their staff, but often also there's a culture of providing jobs for the families of these staff. So they're entangled in many ways in their economies and their countries. But all these NOCs are facing peak oil, and more importantly, the unknown future after peak oil. So NOCs, and the IEA backs us on this, are investing as if there's peak oil, but then there's a plateau, much like a kind of table mountain, okay? But there's increasing credibility of a scenario that actually we'll get to peak oil and there's going to be a drop. And so it's that riskiness that we're looking at, and no one knows what's going to be the true scenario. And we also know it's quite cloudy at the peak, right? It's very hard to take much information from current prices. Like this year, prices have been very high. 2 years ago, they were $20 a barrel. Does that say much about the energy transition? We don't know. So it's really important to be looking at the risk management strategies of these NOCs. And so we did this, and that's what Facing the Future looks at. And we looked at 21 NOCs. 9 out of those 21 acknowledged there is a risk to their business from the transition. But when you look in the details, only 4 of them really provide quantitative measures of this risk analysis. So Ecopetrol from Colombia and Petrobras Brazil are standouts in terms of acknowledging the risk, publishing how they're assessing the risk, and even publishing some mitigation strategies, both in terms of their strategies to find alternative sources of revenue, but also things like decarbonizing. Pertamina from Indonesia is a standout in terms of how much they're in danger. They say by 2030, with the current pace of the energy transition, they'll lose 50% of revenue. And that's backed up with our own data. They're the 5th most exposed NOC that we found in our report. Many have escape plans that they hope they can escape from the global decline in oil and gas. Many are hoping to pivot to gas, whether for domestic uses, regional uses. Some are trying to develop regional markets. So the West African Petroleum Hub is one instance where many of the countries in that region are all trying to find ways of developing that market to shield them from a global collapse in demand. Many are trying to build refineries. Some are trying to accelerate the development of upstream production. And then there's talk of petrochemicals, renewable energy, hydrogen, and so on. We couldn't look at the numbers and we couldn't look at the viability of these strategies, but these are the statements NOCs are making. What's interesting is none of them are appreciating that a plateau in oil demand is not business as usual. That means that we go far past the carbon budget and we come into serious climate change problems, and we know many of those problems strike hardest in the countries of these NOCs. So in Asia Pacific, one report says that GDP by 2050 could be down by 30%. In Asia Pacific and Latin America, in Latin America and Asia and Africa, it's around about 20-25%. So their governments are going to be facing serious problems, and then there's a big call to know, well, what should be happening with this money that's going into the national oil companies? It might be that the national oil companies need to keep getting energy because there'll be such serious problems. All that money needs to go to adaptation and other means. So the second report we looked at was Risky Bets, Smaller Pockets. And that shows that $1.8 trillion is likely to go into the upstream from NOCs. 425 billion of this won't break even under announced pledges scenario, so as I was saying, if governments meet their climate pledges. And 1.2 trillion doesn't break even if the world actually meets a net zero target. So this is important for climate change, but it's also important for the economics of these countries because this money, this high-risk money, represents about 10 to 40% of annual government budgets. So this creates an opportunity cost. This money, maybe it's best gambling into the oil industry, but that gamble only pays off if we miss climate targets. But that money could be going into government programs, to diversification, to social programs, to adaptation. Much of this money is coming from the top 3 NOCs, or the top 3 countries of NOCs, China, Saudi Arabia, and Russia. And that represents almost 50% of all the investments that I'm talking about. There's a second level from Iran, United Arab Emirates, Qatar, and Kuwait. And then there's this middle 10. So from India, Brazil, Norway, Mexico, Indonesia, Malaysia, Nigeria, Colombia, Thailand, and Argentina, some of which are represented here. These are interesting because they're likely to have to go into high-risk assets, so into high-cost assets. Their NOCs are becoming more indebted, and their governments are becoming more indebted, even as the energy transition hasn't properly struck yet. So already a lot of these countries and their NOCs are in financial problems. But some of these are more open in terms of transparency, and also in terms of the types of people that come to these sort of workshops or are open to collaboration. And from a survey from Facing Future, some of those are ranking highest in terms of acknowledging the risk and finding ways of managing it. So it might be this middle 10 where they represent 8% of total investment in the industry, so they're important. But they're also important in terms of the fragility of their economies and their own finances, and so there's a proper just transition issue to be solving here. Thank you.
Great. Thank you so much, David. And for those of you who have just come in, there are some seats up front if you want to come in, so you don't have to stand in the back. Feel free to make your way to the front. I'd now like to invite our last 2 panelists to the stage, please. First of all, we have David Waskow, who is the director of the World Resources Institute International Climate Initiative. And yes, please, ma'am, please come to the front as well. And then we'll hear from our commentator from Nigeria in one moment. Welcome, David.
Great. Thank you very much. And do let me know if I need to be louder. WRI began looking at the question of just transition in the oil and gas sector roughly about 2 years ago. And we were really spurred on by a couple of things. We were beginning at that time to look at just transition issues more broadly. We were doing some scoping of just transition initiatives and efforts around the world. And we discovered a couple of things. First of all, that the oil and gas sector was not one that had been looked at very much at that point. There hadn't been a lot of work done looking at how just transition might be carried out in the oil and gas sector. Not to say there was none, but limited certainly compared to what's been done in the coal sector. And we also were discovering that there was limited work done at that point looking at just transition issues in the global south. I think that's changed a lot actually in the last couple of years. But we, looking at all of that, decided that it was an important task to begin looking at the question of just transition in the oil and gas sector, and began by focusing on middle-income developing countries, which produce about half of all oil and gas in the world. And many of them are countries with NOCs, and so what we just heard from David is often very relevant for those countries. And just to add clarity on middle-income countries, that starts at $4,000 and goes up into the mid-teens or so. So we're talking fairly low GDP per capita countries. We've published a working paper, which came out earlier this year, and are now doing a report that's diving a bit deeper, working with teams in Nigeria and Colombia on just transition in those countries, having to do with their oil and gas sectors. What we have discovered in the course of our work, and we're deepening our understanding as we go, so there's still much to be learned, to be sure. What we have learned so far really has focused on two areas of impact. First of all, employment and local economic impacts, and then secondly, on revenues, particularly for subnational governments at the subnational level. So in the case of the first, employment, let me say at the outset that one of the challenges in looking at this is that the data is fairly scarce. There has not been a significant collection in developing countries of discrete data on the oil and gas sector in terms of employment levels, induced employment, et cetera. So there's a lot of work to be done, I think, just to even understand the employment context. And much of that is because a significant amount of the employment is induced. It's not necessarily direct employment, but it's related to the sector. The ILO has estimated that there are roughly 60 million jobs globally in induced employment from the oil and gas sector. I think that number is likely to be an underestimate. We just, at this point, don't know. But in any case, it's significant enough to pay close attention to this set of issues. So that is the first question that we have delved into. And I would add that induced employment implies local economic impacts as well, right? We're talking about the economy beyond the direct employment in the sector. So the second area has to do with revenues, and this is where I think for us I wouldn't say surprise, but the biggest revelation has been in a lot of ways, and it's taken us into territory that I think hasn't really been explored in the coal sector, for example, having to do with just transition. What we have found is that at the subnational level, revenue declines because of a decline in production over time would be quite significant. And I think we heard from David the kinds of risks that are entailed. In Nigeria, for example, the research team that we're working with at Funai University found that there are 3 states in the Niger Delta that rely on oil and gas revenues for around 60% of their state revenues. And there are 14 states across Nigeria that rely on oil and gas revenue distribution for over 30% of their revenues. And even states like Lagos that are somewhat less reliant have more than 10% dependence on that revenue for the state government. So what we're looking at, in essence, is a significant, not only at the national level, reliance on these revenues in order to finance the basic functioning of those subnational governments. We're finding similar situations in Colombia. We don't have all the exact data yet, but there is quite a dependence there as well by subnational governments. And there are a number of other countries, as I'm sure many of you in the room are aware, that this is the case for. So these are the two main impact areas that we've been looking at. Now, where do we go from there? Let me just quickly tick through some of those are key. There have been very few instances where there's been a participatory process in middle-income developing countries around just transition. Colombia is an important instance now where that is beginning to happen. We've seen it in the north, in Germany and Spain, for example, around coal. But around oil and gas, it's still fairly nascent. And we've seen it in Scotland with oil and gas there. But in developing countries, we're still, I think, in the initial stages of building these kind of processes. And I think that kind of stakeholder approach is what's going to be critical to addressing the transition in oil and gas countries. Second, in oil and gas sectors in those countries that are producing significant amounts of oil and gas. Second is economic diversification. And if you're looking at employment issues, local economic development, and revenues, economic diversification is going to be critical. It's not an easy task, to be sure, much easier said than done. But we do think that that's going to be an essential part of what needs to happen, moving into new sectors, developing jobs. Obviously, reskilling and retraining will be important as well, but the jobs have to be there. And so economic diversification and development will be an essential component. In Chile, as an example, not in the oil and gas sector, but in mining, the government used revenues from the mining sector to finance higher education and IT, and helped expand the economy in those ways. Now, Chile is not perfect, certainly, in terms of its economic equity, but nonetheless, they have been able to find ways to take revenue streams from the mining sector and use that for economic development purposes. Third, I would note, is on the tax question, having to do with revenues. So these subnational governments are going to need support in finding revenue replacement. Diversification is one of the things that needs to happen, but there will also have to be work done to develop capacity for revenue collection, for better tax systems, and perhaps for more equitable taxation as well. So that'll be a key element. There's much more to be said, but I'll leave it at that and look forward to the conversation.
Great. Thank you so much, David. We'd actually now like to get into some of the discussion around this recent analysis and some of the pathways forward. And I'm going to start with Hawa Mustafa, who is the climate coordinator at the Nigerian Labor Congress and a representative to the ITUC Africa. And Hawa comes from Nigeria, where just a few days ago, in fact, civil society groups in the Niger Delta launched the National Principles for Responsible Petroleum Industry and Divestment. So Hawa, thank you so much for being here, and would love to just hear your reflections on some of the challenges with regard to just transition that you're seeing.
Yeah, thank you very much. First of all, like you may know, Nigeria is one of the developing countries. Nigeria is also one of the major oil producing countries in the world, a member of OPEC. But it's in the midst of this big oil and gas wealth, 65% of the population is living in poverty.
Yep.
The inequality is very high. Yet the government largely depends on oil for revenue. Indeed, about 65% of our budget revenue is sourced from oil and gas. About 85% of our foreign exchange earnings is also sourced from oil and gas. So when you talk about transition, and of course, but when it comes to employment, incidentally, direct employment from oil and gas is less than 5% of the total employment. So, but then, most of the livelihoods economy, you know, in terms of either the informal sector or the formal sector, energy source is about 95% dependent on fossil fuel. So you can see for such a country, for us, oil and gas, you know, is the lifeline of such a country. Yet, we know that we live in a world where, I mean, climate change is real and we just have to transit.
Yeah.
So for us, transition is what we have identified as, for now we're downgrading. You know, first of all, downgrading production in oil and gas. And under our NDC and what we have, we also have an energy transition program. We have about 30 years plan to transit. But before then, there's a lot of investment that is still going on in the oil sector. Indeed, even the government itself is still exploring more areas of oil wells. And the reason is simple. As much as we're trying to diversify the economy, we have a weak capacity in terms of effectively diversifying to fill in the gaps where we leave oil and gas out. So that source of income, if we're going to reduce, for instance, the source of income from 65% to probably say 30% or less than that, that means there has to be a sector that is so developed that is going to fill in the gap of the balance of 30 to 35%. As it is today, the other area where we have a competitive advantage is in agriculture. But then again, the agriculture, I mean, it's the economic development in the agriculture sector is largely at a primordial level. You know, it's still at a small scale holder level. The technology in agriculture is not widespread. So we cannot rely on agriculture to fit into producing or providing the much kind of revenue and foreign exchange that the country requires. So for us, therefore, going forward in terms of transition, what we would need or what the country requires is, first of all, how do we diversify the economy in such a way that we prepare for the actual transition? So for us, transition, the first starting point for transition is creating an alternative and sustainable alternative source of income, source of livelihood, energy source, alternative energy source, as well as source of foreign exchange. By the time we are strong in this area, which requires a lot of capacity, largely in the area of technology capacity as well as knowledge and skill capacity. And I think once we are done with that, there's also a need for a kind of a reorientation. The tradition, the mindset of the people in our everyday lives is something that is linked to oil and gas. So that the moment you touch oil and gas, for instance, recently the new government removed subsidy in oil and gas. And I tell you, till date, virtually the whole country is feeling the brunt. So our mindset is such that everything, our lives is generally dependent on that. So even if you're going to do that transition, I mean, put the oil in the ground, don't, you know, shift away from oil. We also need to do a kind of cultural reorientation. Which is very important, because even where the alternatives are there and the alternatives are cheap, there's something about the culture, the tradition, you know, being attached to something. So that is very important for us in terms of transition in the oil and gas sector. And the other thing is also about the education. You know, there's a lot of skill that is already there that is linked to oil and gas. There's even in our formal education training, you know, we are teaching students petroleum engineering, for instance, you know, technology in petroleum and gas and all that. What are you going to do with that? So we also need to transit, even in the way even in our education curriculum, to fit into the new, you know, to fit into the new, or fit into the transition process and the sustainable climate change process that we are trying to achieve. So basically for us also, the conviction is also that we also need to convince even the workers. You know, another thing is the workers that are unionized under the oil and gas. Starting points, unfortunately, they are not sufficiently, you know, knowledgeable about what is happening within the oil sector in terms of transition. The multinationals are way ahead of the workers that are with them. So if I, for instance, Mobil Oil, Texas and so on and so forth, they are now shifting from oil producing to energy. And it is not just the change in name, it is also the change in technology, it is also the change in, you know, they are already transiting. But in their own transition format, the workers are not carried along. So the workers are hardly into the process of understanding, of being part of the process of even identifying what should be done and how it should be done.
Yep.
The government's even process of energy transition, on paper, on the NDC, the government is determined, is well in tune with saying that we are going to transit. But then how are these workers? I know the workers can be very powerful. If they decide to stand and say no and protest no, it makes the transition very, very, very challenging.
Yeah.
So I think it is important that even in terms of inclusion, that's why for us just transition is about inclusion.
Yep.
And inclusion is not just about number, because sometimes the way we talk about inclusion is just like if you bring the trade unions into the table, then it's okay. If you bring the women onto the table, you bring the rural communities onto the table, then you have included. No, inclusion is more than that. Inclusion should be effective. People should be part of the process from a knowledge point of view. And that is why and that's how you can be important. That's how your inclusion can make meaning. But if you are a part as a number, and a number that does not have the knowledge, the capacity to participate effectively in such a way that you benefit from that process adequately, in such a way that you are part of a transformative process, then there's no inclusion. You are just included, you've only included a number, but you have not done justice. There's no justice in terms of that inclusion.
Yeah.
So so for me, I think that it's very important that for us, education is very important for the trade unions, for the formal sector and for the informal sector, considering the issues of culture, how people relate with all their everyday lives, and this process of the use of oil and gas is also very important. And the government, it's also very important that the government also understands where this capacity is. More importantly for us, I think for you to even convince the people, you must let them know that the life that is coming beyond oil and gas is better than what they have now. If they cannot guarantee that the life that is coming beyond oil and gas is better than what they have now, then there's going to be a lot of skepticism, there's going to be a lot of doubt, and there's going to be a lot of lack of cooperation because people are very, very doubtful. There's going to be a scare, especially now with the devastation of oil and gas, particularly in communities where this is being produced. If it preach anything else that does not guarantee, that does not give them the assurance of a better life, then I think we're going to be it's going to be quite challenging to have a sustainable and transformative just transition in the oil and gas sector. Thank you.
Thank you so much, Hawa. Thank you. Yeah, you can take that. Thank you so much, and I think you've touched on the fact that this is not only an economic conversation, it's a political conversation, a social conversation, a cultural conversation. We do have time now for some questions from the audience, and so does anyone have something they'd like to raise? Yeah, sorry. And sorry, we have a little bit of a microphone problem, so if you wouldn't just mind coming around, and if you could introduce yourself, and then answer your question would be great.
Thank you so much for the invitation, NRGI. My name is Pierre. I'm the regional coordinator I'm the MENA regional coordinator for Publish What You Pay, which is a global civil society movement working on a fair and just energy transition. My question is to David. You've spoken about a very relevant topic for us, which is the participatory approach when it comes to just energy transition. So how do you view the role of the civil society when it comes to just energy transition? Is it through researches? Is it through advocacy campaigns? Is it through opening up to the other stakeholders, engaging in debates? This is one. And second, do you expect, and anyone else could answer, do you expect any shrinkages in civic space when it comes to raising the topic of a just and fair energy transition, especially in the global south? Thank you.
Thank you so much, Pierre. And just to say that issue of civic space is, of course, top of mind as we look ahead to the next COP in Azerbaijan, where one of your members of the Publish What You Pay coalition is currently being jailed for his advocacy on national oil companies and the energy transition more broadly. Is there another question from the audience? Yes, please come up. Sorry, actually, we're going to go here if that's okay, and I'll come to you. Mind just introducing yourself and then ask the question.
Thank you. I'm Carmen Virasora from Argentina, and I would like to know your views about the stakeholder engagement plan and the benefit sharing plan that all projects should have, and what is your vision or your experience of those? Thank you. Thank you, and congratulations for a great panel.
Thank you so much. Sorry, can you come forward just a little bit? My apologies.
Sure.
Thank you. Just introduce yourself, please.
Michael Grubb from UCL. Great panel, really interesting collection of studies. Wanted reaction to the following. I think it's not surprising and classic in academic work to look at what should be done. I've become increasingly interested in this area. There's been a few years of literature around sort of supply side constraints, but what is always a lot harder is around the politics of what could be done and how to make it viable. So a lot of the discussion is very understandably around the concerns in developing countries. We've heard eloquently from Nigeria and some others. We also had that great phrase earlier on about, if not the North Sea, then where? And we've had a government which has just announced a whole new round of licenses. So how, or is it a next phase of research to say, how do we deal with the inevitable domestic political pressure to try and say, well, we've got some resources, we want to develop them there, even if logically it leads in 5 years' time to a collapse of the oil market. You've got enough players who just want to make money and do their business in the next few years. And that tends to drive politics. So I'm asking the political question, not the economic one.
Great. Thank you so much. I'm just going to pass the mic down and you can respond.
Start that way.
Start? Okay. And do you mind if I start with David and then come back? Okay. Just the lady's choice. Thank you.
So let me start with the question about participatory processes. I think in some ways you answered your own question, but I think it's all of the above in terms of the approaches that are needed. I think political engagement's critical. I think research and publication on the realities on the ground is critical. And I think on the last option you raised around stakeholder engagement, that absolutely, I think one of the things that is going to be needed is to bring together workers, local communities, environmental groups, others like yourselves, like Publish What You Pay, and business to talk about the way forward. I think that a lot of this, and this comes to the political question, is a matter of, in the near term, beginning to create a framework for people to begin to understand what the path forward can be. They have to understand that the pressures are coming in terms of a likely decline in demand for oil and gas. But then also how to go about building a different type of economy in the context of that decline, as Howell was suggesting. I think bringing stakeholders together to begin having that conversation, and then hopefully that can have ripple effects and lead to policy changes, but also beyond that to a greater understanding of the context that countries are facing and what needs to be done.
Yeah, thank you very much. I just want to add that, first of all, just transition process is expected to be a democratic process where everybody has to be part of that process. Anything short of that, I think the civil society has a right to make a demand. And I would also have to have it at the back of our minds that just transition process, as much as it is economic and cultural, is highly political. It's highly political in the sense that it's also about power relations. North and South power relations, the businesses and the workers' power relations, the government, even in states, versus the people. And so the civil society has an enormous responsibility, including the workers, to hold on to that space that is theirs and demand for accountability and transparency in the process of transition. Whether the political actors are in there, or the multinationals are in there, the businesses, even the workers themselves, we need to demand for transparency. We need to demand for accountability in that process. So there's a lot that for everybody to participate, to ask, to demand, and to also give. Thank you.
Thank you for the questions as well. Very interesting. And I think like one of the cornerstones of the oil and gas transitions projects, or oil and gas transitions project, is actually the participatory process itself. We know that there are countries where this is easier to do, like in the case of Denmark, for example. We know that the whole transition has been basically participatory from the very beginning, and that they have very important success stories also in terms of public-private partnerships with the climate partnerships that they have been championing to support the transition in different sectors. We know that even in democratic regimes like Norway, this is actually very difficult to implement because of how political this debate is, that has created basically two completely separate echo chambers, one with green groups, one with the actual status quo, the government, the industry. And we need to break down those barriers. And actually, when we started with this project, we thought that Norway was going to be the most difficult country to implement this kind of strategy, a participatory process with multiple voices, and to bring all these people to have a conversation around a phase-out, which is basically a taboo in this country. For us, what worked particularly in that case is that in climate strategies, we work directly with academia, for example, and academia has a legitimate position as a kind of a neutral space to bring those to the table without any kind of judgment and prejudice, and without a particular expected result on the table. And we were actually able to engage some of those more diverse and even totally opposing positions to think about, as Hao was saying, what does the future beyond oil and gas looks like? Because in most sectors, even we were having a conversation recently with Equinor, workers in Equinor cannot understand and cannot see what this future is going to look like. And unless they have that vision, there's not going to be a transition. But for us as a neutral convener, that could be a good way to start, to bring even civil society to talk with those more radical positions, focusing on these kind of neutral conveners, academia, really putting evidence and research at the core of the conversation rather than the political views. However, we also found out as a conclusion of the project that it's actually not worth depoliticizing the whole discourse and the whole transition process, because actually maybe it cannot even be depoliticized. Coming back to Michael's question, what we need to do is to very focus on those key challenges to spur the momentum and to really be able to have these kind of difficult conversations. The other thing that I just wanted to mention very quickly, because I don't want to take a lot of time, is around, in the context of the Global South, the importance, and I'm stealing this from a talk I attended to this morning, the importance to really talk about not only the cost of action, but the cost of inaction. And in that case, for example, in the morning it was around trade, but it also applies here to oil and gas, which is really looking at the green competitive advantage that some of these developing countries have. We know that there are barriers and there are limitations, especially when it comes to investment, to be able to profit from this green competitive advantage, for example, access to renewables. And if we are not able to provide credible channels of support to get around these barriers, for example, investment from the developed world, then all of these countries are not even going to be able to see the advantages. They are only going to be seeing costs. So again, going back to these credible narratives, building public support, focusing on case studies that will support developing countries to find a way around this, and the international collaboration.
Great.
Thank you. To the question on shrinking civil space, actually I'm going to answer your question right now as you're leaving. So I don't have the full answer, but here's our strategies. And your question was on how do you address the political drivers of wanting to keep oil production in these sort of countries where this is our oil, it's our right to do this. Our strategy is
particularly industrial restrictions.
Okay. Well, we've been working on the industrializing countries, but this has been our strategy. We've not talked at all about climate change or obligations around that. We've tried to focus on the economics and the viability of some of these investments. And so one West African country a few years ago, we were able to support a movement where the NOC was trying to borrow quite substantial amounts of money from the government for a high-cost oil and gas asset, which just didn't make sense economically, but was going to be pulled ahead anyway if it wasn't for a big civil society action. And that took the news by storm, and there was a huge amount of public support to stop that happening. And when it's couched in terms of what that money could be used for elsewhere, I think it can combat that idea that, oh no, we have to keep pressing ahead with oil. That doesn't stop oil completely, but it gets to this just transition thing of, okay, these countries need to be producing some oil, but they shouldn't be wasting their money either. So that was the answer.
Did you want to respond?
Yeah, and then on shrinking civil space, the only thing I have is that I'm from the UK, and the right-wing government at the moment is trying to make Just Stop Oil and other activist organisations terrorist groups. So it's shrinking in my country.
Thank you so much. Just to wrap up today, I'd like to take a brief comment from each of our panelists. I think one of the challenges that we've heard today is how complex and multifaceted the just transition is. And so from your perspective, could you cite as one thing amongst all of the priorities that we've discussed where you would like to see more investment or the needle moved to start, and that you think would make a difference in this moment? And if you could be brief because we need to wrap up, that would be great. David?
That middle 10 countries, I think, are at the nexus of being really important for fossil fuel phase out and really important in terms of making sure there's a just transition and stopping the next emerging debt crisis. And leveraging donor money and climate finance on those sort of countries, that middle 10, I think will have the biggest impact.
Awesome. Thank you, David.
I think building on what I had said earlier, building out multi-stakeholder engagements in key oil and gas producing countries. And I would say linked to that, maybe cheating and putting a second in, but linked to that and out of that process, I think really developing good economic diversification and development plans and strategies.
Great, thank you.
Yeah, just similar to that, for me, it's basically about capacity building. Capacity, I'll break it into technology. You know, we need technology to be able to identify the alternatives within, you know, our own countries, and the capacity, more importantly, to produce them, you know, into the alternatives that is necessary. And I think this is a way to also jumpstart development in some of these developing countries. And then added to that is the skill and knowledge, you know, even if it means having some kind of exchange of students and trainers or trainees and workers between the South and the global South and the global North, to at least improve and get for the global South the necessary skill and technology they need to develop their own resources into what is needed after transition. Thank you.
Thank you.
I support what David was saying around the economic diversification, but I also wanted to just say that our research supports that basically a delayed action on sustainability is going to lead to more complex transition challenges with or without immediate climate action. So what I would also like to see is some additional research supporting these new narratives around co-benefits and focusing on the opportunities that come from action in the short term. So stop focusing on the cost of action now and focusing on the cost of inaction right now and the opportunities and co-benefits if we actually move towards a transition.
Great. Thank you so much. Huge thanks to our panelists. Please join me in a round of applause, and thank you to our audience. And of course, thank you to the Denmark government for the space. Thank you.